Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing halving year returns. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So it's always worthwhile to just take a step back here, look at year-to-date return on investment, and just make comparisons to prior years and see what does it most resemble, right? What does it most resemble? Is it resembling normal halving years? Is it resembling something else? And so that's really the question we want to answer in this video. So what we're going to do first is we're just going to take 2024 and compare the year-to-date ROI to prior halving years, right? So let's start with the last one, 2020. At this point in the last halving year, 2020, the ROI was a little bit higher than it is right now, right? But all in all, the ROI is more or less where it was back in 2020. And you can see that Bitcoin did, in fact, go up in Q4. If we were to look at 2016, you will see that it didn't go up as much in Q4 as it did in 2020, but Bitcoin still went up into the end of the year. If we look at 2012, you will also see that Bitcoin went up slightly into the end of the year, but first, from this point, it actually bled back down from an ROI of, say, 2.34 back down to 2.04. So it did have a little bit of a drop, and it didn't really start moving back up until, let's say, November, December timeframe. So when you look at all the prior halving years, you can see that Q4 was actually favorable for Bitcoin, right? So certainly that is not something that should be ignored, right? I mean, as we pointed out recently, if you were to look at the ROI from the low and just look at Bitcoin this way, you know, it has reached the point in the cycle when if there's nothing to worry about, right, outside of the normal market cycles, this is the time in the cycle when Bitcoin starts to move up. You can see pretty clearly, like that's when it normally starts to move up around this point in the cycle. And back in March, we said, look, guys, there's going to likely be a 6 to 9 month consolidation period. Now, it's already been 7 months, okay? So I would argue that the minimum consolidation period has been reached of 6 months. And the reason I said 6 months was because I was looking at this chart and thinking, well, there's a number of reasons, right? I was looking at this chart and thinking, well, it'll take about 6 months if we go sideways with a slightly bearish bias, right? Lower highs. It'll take about 6 months for us to get back in line with prior cycles, right? March to September. And then starting, you know, in Q4, it's possible that Bitcoin starts, you know, resumes its journey, right? Resumes its journey that it's been on, right? So Bitcoin has already met that initial window. And so that is why it's worthwhile to look at the year-to-date ROI and say, look, guys, you would have to fight seasonality in Q4, you know, if you're thinking it's going to go down, right? But is there any evidence, right? Is there any evidence to suggest, like, what is the risk, right? Because, you know, to some degree, I think a lot of it is just like, be optimistic, right? Be optimistic. The markets generally go up. They need a reason not to, right? And of course, we got everyone, you know, everyone's screaming for the moon again. But the reality is, as I've said many, many times, the bears sound smart, the bulls make money. But is there any reason to think that it might not play out like this? Now, this exercise is not to suggest, right, that you shouldn't own Bitcoin. I've been saying that for years. Even in late 2022, I said, you know, that was a good time to buy Bitcoin. In early 2022, I converted my altcoins to Bitcoin in preparation for a multi-year Bitcoin dominance rally. Again, no one knows what's going to happen with the market. But I also think it's always a good idea to say, like, what is the risk, right? If Bitcoin does not go up in Q4, what's going on? And if Bitcoin does not go up in Q4, what does that mean for 2025? Okay, you could argue that if Bitcoin goes down in Q4, it could set up for a good 2025, right? I mean, that would be then a 9-month consolidation. So what I'm trying to wrap my head around here is it a 6-month consolidation or a 9-month consolidation? Now, of course, it could be longer, right? Just because I said 6 to 9 months and it's been 7 months does not mean it can't take longer than 9 months. But if Bitcoin goes up in Q4, then the 6-month consolidation minimum was absolutely correct. If it takes another 3 months, right, where is that even coming from? Well, the reason I said it, right, just so we're all on the same page, the reason why in March I said 6 to 9 months was because last cycle, it took 6 months for the initial drop, right, after gold broke out. Took 6 months here, about 24 weeks before Bitcoin started moving back up. But there was a landing at the end of it, and that extended it to 9 months, okay? And what happened back then is Bitcoin broke out of its lower high structure around this time, right? So if you look at this, you can see that it sort of broke out of the lower high structure around the 29-week mark, okay? So if you were to look at something similar for this cycle and say, well, what would the 29-week mark look like? Well, we've already passed it, right? We're already on week 30, and it still hasn't happened yet. So the reason I said 6 to 9 months was because I was saying, well, if it's just 6 months, it's this. If it's 9 months, you got to include the landing in it as well, right? And so that, I think, is sort of the biggest question, right? You know, a lot of times in October, late October, the second half of October, Bitcoin does pretty well, right? I mean, even in 2019, right here, the second half of October, Bitcoin got a pretty nice rally. If you were to look at, you know, even over here in 2022, the second half of October, Bitcoin went up. 2023, right? Second half of October. 2021, if you look at, you know, sort of the second half of October up here. 2020, right here. So it's normal that Bitcoin tends to go up in the second half of October. And I mean, it would, if it does happen, right? If Bitcoin does go up, it still has to face this lower high structure there, right? And what's interesting is Bitcoin has often done that, and it's gotten up into this range around the beginning of the month, right? So back over here, this was the, you know, the end of July, the beginning of August. And then over here, it was the, you know, the end of May, beginning of June, right? And over here, when it first got up here, it got up here in mid-March, but then it came back down, came back up in late March, early April, and then came back down. So what was it, right? What was it that was causing Bitcoin to get this lower high structure to begin with? Because the reality is, while Bitcoin has gone down for the last 6 months, the S&P has been trending up, right? And this is something that we saw last cycle as well, where Bitcoin was putting in this lower high structure while the S&P just kept on going up, right? I mean, you can see it pretty clearly where, you know, Bitcoin was dropping and the S&P was going up. And then finally, the S&P went up long enough, it lifted Bitcoin with it above its lower high structure, and then the landing occurred. Now, I know what you're thinking. The landing, you know, last cycle was a pandemic-induced recession. We're not really to believe that, you know, that is going to happen again. And it's probably not, right? It's probably not. But what was the reason for the lower high structure over here, right? What was it? Well, at the beginning of the month, you get your labor market data, right? And so if Bitcoin finds itself, you know, kind of up in this range by the beginning of October, I would argue that a lot of Bitcoin's potential path for Q4 here is going to depend on that labor market data. So Bitcoin and risk assets in general, I mean, at least the useful ones, right? Not the, you know, the random altcoins that, asymptotically go to zero. A lot of them do, not all of them, but a lot of them do. What would need to happen for Bitcoin to go up in Q4? Well, perhaps you just see the unemployment rate go down, right? I mean, if you overlay the unemployment rate onto this chart, you can see that, throughout all these lower highs here, that was when Bitcoin sort of entered into this phase, right? Where it was really starting to go up. But recently, you can see it's gone down some. So the question will be, what happens at the next unemployment rate print, the next labor market week, which is still, a few weeks away? This is my argument, if the unemployment rate continues to go down, then it's more likely that Bitcoin goes up into the end of the year, right? And people just view this as sort of a one-off thing, which is done, and then it just kind of trends down now that monetary policy is loosened up. If, on the other hand, the unemployment rate shoots back up in Q4, then it might be more likely that Bitcoin does not repeat that and instead could extend what happened in 2019, right? When I look at this chart here of 2024, I try to think about what year looks like this. Besides bear market years, right? Besides midterm years where you put in lower highs, what year throughout all of Bitcoin's history has a lower high structure that's lasted more than 6 months? Of course, you can look at 2014 and you can look at 2018 and you can look at 2022, but those years look a lot different than this year, right? I mean, Bitcoin's year-to-date ROI is still positive this year, whereas those years, it was all, below 1 at this point. So what year is it? Well, it's the year we've been comparing to all year. The year that everyone keeps saying, why do you compare to? 2019. Because in 2019, there was also a very similar lower high structure that was developed, right? But this is where the lower high structure ended, right? You can see there was a couple of, there was a low and then a final low, and then kind of the same thing over here. And then Bitcoin in 2020 started to trend up. It broke through the lower high structure. So what happens here, right? Is it a continuation of 2019's lower high structure because QE hasn't, resumed, right? Is that important? I mean, if you look at the lower high structure in 2019, the unemployment rate was generally going down. And also, if you were to look at the balance sheet of the Fed, it was already going up, right? It was already expanding, which isn't happening right now, right? It's not happening yet. And to some degree, I wish we had more data to compare to, but we only have a single data point here. So how do you navigate that? Well, as I've said again, for years, Bitcoin heavy is a good way to go if you believe in the Bitcoin dominance view. That dominance is going to keep remaining bullish until QE returns. But here's the thing. If you do get a bad labor market print in November, then it does likely mean that QE will be on the way, and it means Bitcoin dominance should be topping. And I do think dominance will top before the end of the year. So, to recap, if the labor market print for November is good, and it looks like the labor market is recovering from all the tightening and whatnot, then it's more likely than not that Bitcoin just follows what it does in most Q4, in all Q4 of halving years, where Bitcoin goes up. If it doesn't, if the unemployment rate goes back up, then it would probably deviate, right? And I've said that for years, right? The market generally goes up. It needs a reason to go down. And the only reason that, I think would really affect things is if the labor market is showing any weakness. There is one example, right? There's one example where, the labor market essentially was, the unemployment rate rallied up to 4.3%, and then after going up to 4.3, it was in 1957. right here, it went from 3.7 to 4.3, and then it pulled back to 4.1 over 2 months. And then the next unemployment rate print was 4.4. So it went from 4.1 to 4.4. So if the unemployment rate print goes up next month a lot, like let's say it goes back up to 4.3 or 4.4, then I would say there's a better chance Bitcoin might deviate from that trend and extend the consolidation period from 6 months to 9 months. If the unemployment rate is good and it goes down, let's say it goes back down to 3.9 or 4, then I would guess that Bitcoin will go up in Q4. So it's more of like an if-then statement. And I get that that's frustrating for people, right? They want an answer. They want to know what's going to happen. But I would have you consider this. For everyone who's been so confident this year as to what was going to happen, how many of them were right? Right? How many of them are right? How many people told you since March why Bitcoin was going to go to 100K in April or May or June or July or August or September, right? So being confident does not always mean that you're right, right? And sometimes as an investor, it's about weighing the risks, right? It's about saying, you know what? There is a good chance Bitcoin's just going to do what it always does in Q4 of halving years. And everyone's trying to overcomplicate it by looking at all this other data that is very hard to trade, and no one can predict recessions anyways, right? So why bother? And that's an important part, and that's why I own Bitcoin. There's another part that says no one knows what's going to happen in the market. No one. And for everyone who claims that they do, look at what they've been saying for the last half year, and how many people told you that when gold broke out and USDT dominance hit its long-term trend line, that Bitcoin would enter into a 6 to 9 month consolidation, right? Not a lot of people, I don't think, were saying that. I'm not saying no one, but I don't really think a lot of people were sort of expressing those views. And so it's all about weighing the risks, right? And the reason I say that is like, having exposure is one thing, but it can also make sense to be hedged for other outcomes as well. And so that's what I'm just showing you all the data for, right? Year-to-date ROI for halving years looks pretty good for Q4. ROI from the bottom would look good for Q4. ROI from the peak, take it or leave it, right? I mean, if you compare it to last cycle, it would look good for Q4. If you compare it to the 2016 cycle, there's still plenty of time for Bitcoin to cool off before it needs to go up. Otherwise, it's deviating, right? So I think it's an interesting, it's a lot of interesting things to look at. Like, you can certainly find the silver lining pretty easily. You just say, look, guys, Bitcoin's been consolidating for 6 months. We don't need a crazy pandemic drop like last time. So why not be optimistic? So this is where I am, right? I mean, this is where I am right now. And I do think the labor market will have an important role here in Q4. I really do. I mean, I think that the last thing, the last thing to look at here is the uninversion of the 3-month and the 10-year yield. After all these other prior events, Bitcoin has then sold off, and then it is rallied back up, right? What other events? The uninversion of the 2-year and the 10-year yield, which just happened, right? If you look at that, if you go look at Treasury yield spreads, we just had the uninversion of the 2-year and the 10-year yield. And what happened as it uninverted is there was a little bit of a sell-off, back in August, as you guys remember. And so that was also around the time that the SOM rule got triggered. So the market was spooked. And when that happened, the market sold off, right? Right? It sold off here in August. The other thing that will happen at some point, probably within the next few months, is the uninversion of the 3-month and the 10-year yield, right? That hasn't happened yet. And it's hard to say exactly when it's going to occur, right? I mean, if you go look at market expectations for rate cuts, and you just look at sort of these probabilities, the market right now is saying 4.5% by the end of the year, right? So if you go look at the yield curve, the 10-year right now is at 4.1. The 3-month is at 4.6. But again, the Fed funds rate is at 5. But the 3-month is, you know, considerably below the actual Fed funds rate. But in, say, 2 months, if the Fed funds rate is 50 basis points lower, then maybe the 3-month will be about 50 basis points lower, which would put it right in line with the 10-year yield. So you might get that uninversion of the 3-month and 10-year yield before the end of the year, right? It could actually happen before the end of the year. What's interesting, if you go look at the yield curve and you look at the 2-year yield and how long it stayed inverted, it really inverted in July and then it uninverted in August of 2 years later. So it was basically almost exactly 2 years, right? From July of 2022 to August of 2024. But if you look at the 3-month and the 10-year yield, it didn't invert until October, right? October. So 2 years and a month after that, kind of like the 2-year, would actually put it in, you know, November, maybe December timeframe, because this was actually, you know, near the end of October. So that's the only other thing that might be worth considering as it relates to the yield curve. The other thing that I have found kind of fascinating to follow, and I don't know why I go back to this. I like looking at the, you know, maybe one reason I look at the stablecoin supply ratio oscillator. I don't really think anyone looks at this that much besides me, but I find the stablecoin market fascinating because if you look at stuff like USDT dominance, it's done a great job of telling you when corrections are going to actually come in the cryptoverse, right? Every time that USDT dominance has hit this trend line, Bitcoin has had a sizable correction, and you can see that it hit it again in March 2024. And I tweeted about it on that day, March, I think it was like March 18th, and I made a video saying, look, guys, here we are. Same time gold broke out last cycle in June of 2019, there was a large correction in the cryptoverse, and the stablecoin market cap, the stablecoin dominance went up, and it has again. And so maybe it's because, and even then, if you look at Bitcoin dominance plus USDT dominance, look, I mean, it looks like it's trying to potentially do the same thing it did last cycle, come up to around 64%, and then break out. Right? So perhaps it's because I see that the stablecoin market has a role to play that I find value in this. And I was looking at this earlier. We've been following this for a while. You can see that the SSRO, you know, where it sort of topped out in this range, you can see it topped here in 2021. And then as it went down, the price of Bitcoin went up a little bit, right? Here again, it topped here. And then as it went down, the price of Bitcoin continued to go up. But ever since March, it's been putting in lower highs, right? Ever since March, it's been putting in lower highs. And you can see very similar things even in 2021. And what's interesting is when it bounced right here, we talked about this. We actually, in one of the bull market spread pen videos, I talked about this. It looked like this was a good spot for it to bounce because this is exactly where it bounced in January of 2022 before Bitcoin rallied for a while. And it's also exactly where it bounced in October of 2019 before it rallied for a while, right? Now, if Bitcoin doesn't go up in Q4, then it might send the stablecoin supply ratio oscillator to the lower bound, which is where it went, you know, in May of 2021 after the big drop and in December 2018 after the drop. In the short term, you know, I think one of the things to look at with Bitcoin is this structure, the sort of the descending broadening wedge. This is actually a little different than what 2019 was, right? If you look closely, right? If you look in 2019, Bitcoin was putting in lower highs, but, you know, it was also kind of trending up for a while, right? It wasn't really putting in many lower lows until quite a long time later, right? And even then, it wasn't really a descending broadening wedge. It was just a wedge. I mean, it was just this wedge, and then it broke out of it, right? But this one looks a little different, right? This one was sort of getting narrower. This wedge has been getting wider. And the question, right, is, does it break out here in Q4? Or does it come down one more time and then break out? That's the question, right? That's the question. Because I think there's a decent chance it's going to follow one of those two paths. That would be a scary drop if it happened. And I'm not asking you to to assume that that's going to happen, because there's a good chance it won't. But if it does, right? If it does happen, it would allow for other parts of the market to do what I think they should do, right? One of those being ETH. Which is kind of funny because, it was actually the same time in 2016 where ETH actually went down in Q4. And it went to the lower logarithmic regression trend line. But what's fascinating is you might assume that if ETH goes down, Bitcoin has to. And you're probably right? I mean, I think Bitcoin and Ethereum are a lot more highly correlated today than they were back then. You could even look at the correlation coefficients and see it pretty clearly, right? I mean, if you just look at Bitcoin and ETH, they are pretty highly correlated. Well, maybe not right now. I mean, 0.65 is not a huge correlation, but that's over 6 days. If you look at over 365 days, it's a 0.87 correlation, right? So they're pretty highly correlated. So if Ethereum does go down in Q4, it's more likely than not that Bitcoin would also. But there is something that would fight against that view. And that's what happened in 2016, where Bitcoin went up in Q4. Right? Bitcoin went up here. And ETH went down. And I'm like, could that happen again? And I don't know. I mean, and that's kind of why I just stick with mostly Bitcoin. I have started to hedge a little bit with ETH because of ETH has gone to 0.03 to 0.04. And that's where I think the bottom's going to be, is between 0.03 to 0.04, the ETH Bitcoin valuation. So I think it makes sense to hedge, absolutely. But I'm just looking at this and I'm thinking, if it does do this, does it happen as Bitcoin goes up? Because if ETH goes down while Bitcoin goes up, that sends the ETH Bitcoin ratio a lot lower than what I think, right? I said worst case scenario is 0.03, but I don't really think 0.03 is going to happen. I could see it going a little bit lower, maybe, but not that much lower. So one option is it just goes down. And actually, what's interesting is if you look at the dollar was also going up in Q4 of 2016, right? The dollar was going up in Q4 of 2016, which is starting to happen in Q4 of 2024. Right? I mean, it's kind of fascinating how it's all playing out in a very similar way. Pull up the ETH monthly candles and see how every green monthly candle in 2016 has been green in 2024, and every red one in 2016 has been red in 2024. And even October so far is red, and it was in 2016. The only real difference, right now is that the unemployment rate is going the opposite direction from 2016, right? 2016, the unemployment rate was going down. 2024, the unemployment rate's going up. So, you could have another scenario where Ethereum basically you just connect the dots, right? It has your first scare in April, your second scare in August, and then your final scare in December, which is exactly what happened in 2016, right? Your first scare was in April, your second scare was in August, and your final one was in December. Same thing, right? April, August, December. Welcome home. So if Ethereum goes down here and it's on a Bitcoin rally, then RIP ETH Bitcoin, right? If it comes down here and it's on a Bitcoin dump after a bad labor market print, then it could look something like this, right? Bitcoin drops back down to the 100-week moving average, right? To the 100-week SMA, kind of like 2019, and then it goes up. That's the risk, right? That's the risk. And again, I think it makes sense to look at both views and be like, you know what? They both have merit. If you look at year-to-date ROI, I mean, if you just simply look at halving your returns, it's kind of bold. It would be very bold to 100% fade the Q4 halving year rally. But you can't go into it and blindly assume it has to happen, because there is at least some evidence to suggest it might not. And the thing is I would argue that if Bitcoin goes up in Q4, it'll probably outperform ETH still. So it's still, and it'd probably still outperform most alts. So I would say exposure, in my view, to maximize your risk-adjusted returns should probably still be mostly limited to Bitcoin. But because we're so far into the Bitcoin dominance rally, I do think it makes sense to hedge, right? The other views. Because while I think Bitcoin dominance will go up, I don't think it's going to go that much higher, right? I think it'll go to 60%, but I don't think it's going to go that much higher. But anyways, guys, those are my views. Thank you guys for tuning in. The main, the long story short is Bitcoin normally goes up in Q4 of the halving year. So if it happens, be prepared for it. Don't pretend like it was unforeseeable. But if on the other hand, it doesn't, look to see what the labor market data comes in November. Base case, if the labor market data comes in really bad and it looks like the unemployment rate's trending back up into the end of the year, I would say base case is that Bitcoin gets into a soft landing scenario where it potentially goes back down to the 100-week SMA and then goes up in 2025. If the labor market data comes in great in November, then it's more likely than not that Bitcoin just trends up into the end of the year. So we'll see what happens. We'll take it one step at a time. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.